Okay, so Cboe Global Markets, one of the biggest exchange operators in the world, just dropped a monster of a quarterly report. We're going to break down their record-breaking numbers and really get into the one thing that's fueling this incredible gold rush.
So you hear the term record quarter thrown around a lot, right? But what does that actually mean when you're talking about a global exchange? Let's put some real numbers to this story to see just how big this was.
All right, first up, let's talk net revenue. In the fourth quarter, they brought in $671 million. Now, that's a 28% jump from the year before. And let me tell you, in this industry, that kind of growth it's huge. And get this, their adjusted earnings per share, which is really a key way to measure how profitable they are, shot up by a staggering 46%. Yeah, that is the kind of number that makes absolutely everyone on Wall Street stop what they're doing and pay attention.
So the main takeaway here is this wasn't just a good quarter for Cboe. This was an absolutely stellar, knock-it-out-of-the-park quarter, setting brand new records for both the money coming in and the profits they're making.
The CEO, Craig Donohue, came right out and said it. This wasn't a fluke. He highlighted that the whole business is strong. But when you really start digging into the numbers, one area in particular was the clear superstar.
So what was the secret weapon? What was the engine behind these record-smashing numbers? Well, take a look at this. While every single part of their business grew, which is impressive on its own, the derivatives market was on another level. It saw a stunning 38% increase in revenue. I mean, it wasn't even close. It just blew everything else away.
So what exactly are derivatives? Let's break it down real simple. Think of them as financial tools that let you either bet on or protect yourself from where the price of something else is going to go. A super common example is trading options on the S&P 500 index, which Cboe calls SPX. But here's where the story gets really interesting. The real explosion in trading is coming from one very specific kind of option: 0 days to expiration, or 0 DTEs for short. And these things have become wildly popular because they let traders make bets on market moves within a single day, often using less capital.
And their impact has been just incredible. Just look at this. These same-day options now account for over 61% of all the trading volume in Cboe's biggest product, SPX options. They have completely and totally taken over the market.
Now, this boom has also meant that Cboe is really focusing on investor education, and you can see why. They are trying to draw a very clear line between their popular index products, which track a whole bunch of stocks, and these newer 0 DTE options on a single company. Because, let me tell you, the risk involved is completely different.
As one of their executives, Rob Hocking, points out, this distinction is absolutely critical. See, with index options, the trade settles in cash. It's clean. But with single stock options, you could be forced to actually buy or sell the shares. And that's a surprise a lot of traders are not ready for. It's a whole different level of risk.
But here's the thing. Even with all this incredible success, Cboe isn't just sitting back and coasting. They're actually making some pretty big strategic changes to focus even more on their biggest strengths. This is all about smart, targeted growth. So they're actively selling or shutting down several businesses all over the globe. We're talking their exchanges in Canada and Australia, their European derivatives platform. This isn't a retreat. It's a very deliberate, very strategic house cleaning. And here's why they're doing it. By getting leaner, it allows them to double down on what is clearly working so well. Their core derivatives business, growing internationally in places like Asia, and coming up with brand new products. It's about aiming all their firepower at the biggest targets. So, with all this new focus and all this capital, where is Cboe placing its next big bet? Let's dive into what they think is the next major frontier in trading. They're moving into something called prediction markets. You can basically think of these as a stock market, but for real-world events. So instead of buying a share of a company, you might buy a contract based on, say, whether the Federal Reserve is going to raise interest rates.
And this isn't just some vague idea. They have a very clear plan to roll this out. They're starting with what they know best, financial and economic events, and they're going to launch these things as fully regulated securities using all the expertise and trust they've already built.
But the key insight here, the real genius, is that this isn't a huge leap for their customers. Cboe sees that hundreds of thousands of times every single day, traders are already making very similar yes or no bets with their SPX options. So moving into prediction markets, it's really just the next logical step for the way people are already trading.
Okay, so let's tie all of this together. We've seen the record numbers, we've seen the derivatives engine, and we've seen their big bet on the future. So what's the big picture here?
Really, Cboe's story is a perfect example of two massive trends that are reshaping the world of finance right now. First, there's this huge demand for faster, more immediate trading tools, and that's being driven by a whole new generation of investors. And second, it shows the incredible power of strategic focus, of cutting what's not working to pour every bit of energy into your core strengths.
And all of this leaves us with one final and I think crucial thought. Cboe is, without a doubt, building the tools for the future of trading. But as everything gets faster and more complex, it really makes you wonder, are these innovations creating a future of smarter, more efficient markets? Or are they just creating a future with new and maybe even greater risks? These new tools offer incredible power, but they also demand more knowledge and more caution than ever before.